This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril in Singapore. The top stories this hour. Asian stocks look set for a positive open as traders look past last week's turmoil. Sentiment improving on expectations of potential Fed cuts and reports the US may allow Nvidia's AI chip sales to China. BHP walks away from Anglo American after a fresh bid for its rival failed. It's the second time BHP has had a change of heart over Anglo. Secretary of State Marco Rubio says President Trump's Thursday deadline for Ukraine to support a US-backed peace plan isn't set in stone. And Japan hits back at China as tensions spiral over Takaichi's comments about Taiwan. Tokyo says they'll deploy missiles to an island near Taiwan.
The Japanese stock market closed on holidays today, but we're following the Japanese yen at the moment, which of course is holding at that 156 level. And this after strengthening a little bit in the past session. We had one of the strongest warnings coming from government officials about potential intervention. In fact, the finance minister really talking about intervention specifically. So we saw a little bit of upside, which really wasn't held. We're still trading at around those January lows against the US dollar. Nikkei futures pointing to the upside. We're seeing a little bit more upside in sentiment across the Asian session. And you can see the ASX 200 gaining 1%. We mentioned BHP walking away from Anglo American, Anglo rejecting the offer as not being superior to that of Tech Resources, which they'll vote on in about 3 weeks. We do have a couple of rate decisions across the week, so do watch out for the RBNZ, expected to hold rates steady on Wednesday. The BOK also expected, the RBNZ actually expected to cut on Wednesday, but the BOK expected to hold on Thursday, Avril.
Yeah, Shery, as we watch the Fed speak, I think that's what really turned markets around last Friday. We heard from the New York Fed President, John Williams, and he seemed to be backing the calls for a cut come December, talking about how he sees policy right now as moderately restrictive. This, of course, goes against what a couple of his colleagues on the FOMC have been voicing of late. But that very comment actually spurred the market optimism that we could see a cut. So the odds surged back to about 60% for December. Overall, stock market steadied. We also saw volatility slide a little. That being said, Nvidia was still under pressure for the day. That's something we're watching in the session, of course, given, as you say, the reports that Trump administration officials might be considering this plan that could allow Nvidia to sell its H200 AI chips to China. We are seeing the dollar flat for another day. Of course, very aware of the data we are getting out of the U.S., given how the UMich consumer data has come in very dire. We are watching out for retail sales data that is due on Tuesday as well. Now, watching oil prices, given how Trump has been pushing for this Ukraine-Russia deal.
Yeah, let's actually talk a little bit more about that because Secretary of State Marco Rubio now saying that President Trump's proposed deadline to secure Ukraine's support for a U.S.-backed peace plan by Thursday isn't necessarily set in stone. Rubio's comment comes after U.S. and Ukrainian officials met on Sunday in Geneva and as Trump pressures Kiev for a deal.
It is probably the most productive day we have had on this issue, maybe in the entirety of our engagement, but certainly in a very long time. But work remains, and because this continues to be a working process, I don't want to declare victory or finality.
Let's bring in Bloomberg senior editor Wendy Benjaminson. And Wendy, still for this deal to be approved, all three sides, including President Trump, Putin, and Zelensky, need to approve it.
That's right. And Marco Rubio, you notice, said there was a lot of progress. He never detailed what that progress was. And his Ukrainian counterpart, Andrei Yermak, didn't come out and speak to reporters. And Zelensky put out a video that was sort of vague but said, yes, we want to get to peace. There are so many things in this plan that Ukraine has already rejected and that Congress isn't crazy about. We had a Republican congressman on the Sunday shows this morning saying that he would advise Zelensky not to sign on to this because it gives him nothing and gives Putin a lot. So I don't think we're at the moment extremely close to peace in Ukraine.
What are European officials saying?
Well, the European officials weren't that crazy about it either, nor were they that happy about being cut out of the discussions. Remember, this 28-point plan came together between Trump's special envoy Witkoff and a Russian official. But there was no high-level summit between leaders. There was no, we've seen some of the details, but from Ukrainian officials only, and so it's a very sort of odd way this is working, and the Europeans certainly feel left out. They don't like the idea of what it gives to Russia and what that signals for their future. And they don't like the sort of loose security guarantee that Ukraine gets in this plan. So again, there's still a lot to go.
Wendy, what are the odds that we see a plan somehow being agreed upon without much of the details? We talk about this 28-piece plan, but it kind of reminds you of what was inked out with Gaza, and we know how that's been unfolding.
Exactly. That's a very good point, Avril. And, Trump had set a deadline of Thursday, which in the U.S. is a major holiday of Thanksgiving. So, that was an odd deadline to set anyway. Obviously, it's not that holiday in Europe or elsewhere. But but Rubio said today, Thursday, Friday, Monday, sort of whenever this comes together, striking a more realistic tone that there is a lot of talking that still has to be done before this plan can be seen. We know the basic contours of this plan. It freezes the battle lines sort of where they are and actually asks Ukraine to give up regions that Russia has failed to fully conquer in eastern Ukraine. And so we know that's probably a non-starter. On the other hand, for Zelensky, winter is coming on. The Russians are relentlessly bombing energy facilities. And so many, many Ukrainians will go hungry and cold this winter. So he's under a tremendous amount of pressure to try to find a deal, even though it doesn't appear that he entirely trusts Donald Trump as an honest broker in this case.
Wendy, thank you so much for walking us through what is at stake and what the contours of this possible plan might look like. Really appreciate it. Our Bloomberg senior editor, Wendy Benjaminson. Let's take a look as well at how miners are faring in Australia in the early goings. Of course, there's been this back and forth between BHP and Anglo American, as there was some talk that maybe they would be approaching this takeover, but almost just as quickly as we heard the news, that seems to have unwinded for the moment. Still, amid this general positive mood in markets, you're seeing the miners in the green. Copper's not really giving us that much direction. Let's get more on this latest back and forth between BHP and Anglo American with Bloomberg Metals and Mining reporter Paul-Alain Hunt. Paul, it's been a year. Why did BHP come back for Anglo?
At the end of the day, it's all about the fundamentals. Copper is key to the energy transition, it's key to electrification, and it's key in the rise of data centres and things like that. So this is an area that BHP really sees growth in. It sees growth in two assets, in two areas or two commodities, that is potash and copper, the red metal. So it's all about copper. The other thing is that the copper universe is quite small. So if we look at copper major copper stocks, they're pretty rare. Projects of the size that Anglo have and the quality that Anglo have are really hard to come by. And finding new copper deposits is just getting harder and harder, and they're becoming harder to mine. So BHP is looking around. It identified Anglo last year as a beautiful target that it really wanted to make a deal with. However, that didn't happen. Now Anglo and Teck have made an agreement to merge together or to have a deal of their own, and BHP pretty much saw time running out as a shareholder vote between Anglo and Teck Resources comes to the fore in a few weeks.
Why couldn't BHP do better if they really need Anglo?
Well, this is it. It was never going to be easy. It certainly wasn't going to be easy last year, and it wasn't going to be easy this time. We don't have a lot of detail, I will say that at this point. We only broke it last night, of course, this story, but we do know that it was scrip or shares and cash. The premium that BHP would have had to have offered to get a real serious recognition from Anglo and have a proper discussion would have been significantly higher. So when Anglo rejected BHP or rebuffed BHP last year, it went on to divest some of its non-core assets, to simplify its business, and shareholders rewarded Anglo by sending the share price higher. So BHP really would have had to have offered a significant premium. Then there's also some of the other issues that we saw last year. So antitrust, you know, they would have had to have won over regulators in South Africa, and copper stocks generally have been trading higher. So those are a few of the many challenges that BHP would have had to have embarked on, and that's not even starting on China antitrust or some of the other issues.
Yeah, talk to us about some of the other issues. I mean, given for BHP, now it's getting this offer rebuffed by Anglo. What does this mean for BHP?
Well, I mean, there's a lot of questions. As I mentioned, copper is key to BHP's strategic growth plan. Where does it go now? I mean, its copper assets in Chile are in decline, as in they're very old mines. They've still got copper there, but the grades are falling. Production will fall over the next handful of years. And how does it replace that? BHP only just became one of the largest, or the largest copper producer in the world this year, and it wants to retain that crown. But how will it do that unless it can get new projects, new copper ore out of the ground when it doesn't have those assets? So it's very much where do they go for growth? That is a big question that I think management are grappling with. It does have a couple of new projects. It's got Resolution Copper in the US, and it's got a project called Vicuna in Argentina. But those are greenfield projects, and mines of that size can take years, if not decades, to get off the ground. There is one further question that I think we should acknowledge, and that is earlier we reported, many months ago, we reported that BHP's succession period is coming up. Does BHP's CEO Mike Henry stick around, or does he now take a look at other options?
Bloomberg Metals and Mining reporter Paul-Alain Hunt there in Melbourne with all the latest potential mining deals around the world. Right, Bloomberg has learned that U.S. officials are holding early discussions on whether to allow Nvidia to sell its H200 chips to China. Sources say Trump's team has conducted internal talks about shipments in recent days. To assess whether this could bring any cheer to equity market investors, let's bring in our executive editor for Asia Markets, Paul Dobson. And Paul, we know that even if the U.S. allows these chips to be sold in China, whether or not Beijing actually wants their companies to buy them is a whole different issue. So how much of a difference will this make in investors' minds?
It is unclear, Shery, as you say, whether China would even want them if that were possible. But it's certainly something that gave the markets a boost on Friday in the US. It lifted Nvidia stock and helped the market to turn around. There were some other factors that came into play as well that we can talk about. But that certainly gave the market a lift. And the idea being that, maybe there's a little bit of a thawing there somewhere along the ways. And that might help Nvidia, which has always said it really wants to be present in China, even in the last earnings last week, was talking about that, but at the moment can't really get in there. I think the things that we want to watch today are whether that helps Chinese markets more broadly, China tech, whether it lifts Samsung, SK Hynix, TSMC, the suppliers for Nvidia, and on the flip side of that, what it does to the Chinese domestic chip producers, which are having a really good run by being given that kind of open ground, that playing field to get into without the competition from Nvidia there at the moment. So a couple of different areas to watch, some positive, some negative potentially. But a lot of it is still unclear at this point and unconfirmed. So we're still, a little bit flying in hope rather than in reality.
Is that a similar narrative when it comes to the Fed and the December rate cut expectations? We are flying on hope in spite of what John Williams has been saying.
Yes. Yes, we are, Avril, aren't we? A little bit. But what Williams gave us, he opened the door again after the market had basically discounted the idea that the Fed would be able to cut interest rates in December based on the number of voices that were coming in that were suggesting a no vote would be their verdict. Williams said, you know, there could be ground still for a cut in the short term. And the reason that it's important is because Williams is also seen as being quite closely aligned with Jerome Powell. So if you had both of those voting for a cut in the December meeting, then maybe that swings some of the other policymakers and turns it into a move after all. So that really had two impacts. One, it lifted the odds of a December cut in the market back to about a 2/3 possibility. And two, it helped lift those US equities, as I was saying, into the close on Friday. We've had positive sentiment from Bitcoin over the weekend, and we're looking bright again at the open for our markets this morning.
Thanks for getting us set up for the day ahead with Japan close today. It'll still be really interesting to watch how South Korea, Taiwan perform. Our Bloomberg Executive Editor for Asia Markets, Paul Dobson. We have more ahead on the Asia trade. This is Bloomberg.
We have the readout of the peace talks that happened over the weekend between the United States and Ukraine in Geneva. The White House now saying that Ukraine says concerns have been addressed during the meeting. The White House also saying that the meeting marked a significant step forward, that they will continue talks to move toward final refinement of that deal. Remember, they're talking about the 28-point plan dropped suddenly by the Trump administration to Ukraine as a take it or leave it proposition just days ago. Mostly the result of several weeks of negotiations behind the scenes between the U.S. and Russia. We heard from Secretary Rubio in the U.S. that President Trump's proposed November 27th deadline, that's Thursday, is not set in stone. And we're now seeing some details coming out of the White House saying that Ukraine is now saying that the current draft reflects national interests.
Shery, we are seeing oil prices remaining relatively range-bound despite the geopolitics, and that's something that's kept a lid on inflation. 4 central bank decisions that will be up on the docket this week. What we're watching for in Asia, they include the RBNZ. That's expected to cut again as growth stays weak. Meanwhile, we have the BOK and Sri Lanka Central Bank. They're likely to keep rates unchanged as policymakers tread carefully after earlier cuts. Now, India will report third quarter GDP on Friday, and Bloomberg Economics sees India's economy slowing during the period, dragged down by weaker tax receipts and a slowdown in services. Let's get analysis with Wang, Chief Asia Pacific Economist at Vanguard Group. Wang, great to see you. I think it's worth starting with what we are seeing out of the U.S. in spite of these Asia Central Bank decisions that are coming in this week. Talk to us about your base case for December from the Fed.
Avril, I think December now become a very close call, given a very divided Fed and also the lack of clarity on the economy. In our view, we think they shouldn't cut as the broader data flow actually show the resilient economy, and also there's no sharp deceleration in the labor market situations. Also, when there is not availability of important data, generally central banks will bias towards no action. However, I would say if central bank, the Fed actually stay with their risk management approach, and then they focus on any signs of labor market slack, such as the higher unemployment rate in the September payroll report, then yes, I would say a cut is quite likely in December.
Qian, what would hold from the Federal Reserve in December mean for Asian central banks? Would they still stay cautious like the Fed? Although this week we are expecting the RBNZ to move.
Well, I think, I think the Asian central banks generally, I would still say they want to focus on their domestic situation. I mean, in recent months, we do see Asia central banks actually has turned less dovish, right? One, because of exports and economy seems to be holding up well, better than expected. And also they have been cutting quite a bit over the last, 2 years. So at this moment, in general, I would say they don't feel that urgency to ease policy. I think that will actually, show up in the BOK, Bank of Korea decision, where they're going to focus more on the financial stability risk and also the housing market situation. Now, when you talk about the RBNZ, I think that's where the domestic situation is much worse. The inflation continue to fall, economy stay weak, and also unemployment rate is actually hitting a 9-year high. That is actually higher than the level we've seen during the pandemic. So I think that weak fundamental definitely justify RBNZ to cut, this week.
Which among the Asia-Pacific economies do you see as the most or among the most vulnerable, and how are you assessing that? Through which lens? Is this a matter of whether they have large enough domestic economies, the ones without trade agreements that are airtight with the U.S.?
Mm-hmm. Yeah, actually, I think, recently we have turned actually more positive about the global economy. We've been revising up our forecast in the U.S., in China, and even for Asian economies, we are also turning more positive. Yes, a lot of the export-oriented economies will actually suffer from slower export, right? Either payback of front loading or the lingering effect from higher tariffs. But I think that magnitude is more manageable. The export-oriented economies in Asia will continue to benefit from this higher or stronger AI investment demand across the world.
Yeah.
And also, I think there's a fiscal support as well, right, in many of the economies in Asia.
Just really quickly, Qian, on those AI exports, at what point do the artificial intelligence economic dividends start to pay off in a manner that actually affects central bank policy decision at some point?
Well, I mean, I think this is where we to the two stage of the economic gain of AI, right? The first stage. Now, of course, I know that everybody was looking for the ultimate productivity gain, right? Because AI makes us more productive and more efficient. But I think that probably will still take several years to come when we see more application of AI. But in the next 2 or 3 years, what I think is going to boost up the growth is really this AI-related investment, data center, cloud, chips, and further down the road, there will also be more investment in, AI application, right? So once they actually sustain the economic growth, then this is where I would say that will actually make central banks less concerned, let's say, about the economic growth picture.
Wang, we'll have to leave it here, but great to have you with us, Chief Asia-Pacific Economist at Vanguard Group. We have more to come. This is Bloomberg. Take a look at how U.S. futures are trading after seeing that turnaround last week. There are hopes of a Fed rate cut in December. You can see U.S. futures pointing to the upside of 0.5%. The New York Fed President John Williams seeing room to ease policy. And remember, he's sometimes seen as a proxy for Fed Chair Powell. And Powell himself hasn't necessarily said anything publicly. We're also watching some of that optimism of potentially the U.S. allowing Nvidia to sell its H200 AI chips to China, according to sources speaking to Bloomberg. We have more ahead on the Asia trade. This is Bloomberg.
Now, one of our top stories, Bloomberg has learned U.S. officials are having early discussions on whether to let Nvidia sell its H200 AI chips to China. It's a move that would mark a major win for the world's most valuable company. For more, Bloomberg's Asia tech correspondent Annabelle Jolas joins us from Hong Kong. So, Belle, we don't have to talk you through the significance of such a potential move, but what do we know about this? What are U.S. officials discussing?
Yeah, well, I think we probably need to start by setting the stage here around exactly which product we're talking about, because as you said, we're discussing the H200. A lot of the conversations we've had have been about the H20. So the H20, both of these are from the Hopper series, but the H20 is the chip that was specifically designed for the mainland market. The H200 is an international product, and it's one that has significantly more compute power. It's got faster memory, more bandwidth. Essentially, it's a high-performance GPU that's designed, as I said, for that global market. So the fact that we're talking about the H200 now, not the H20, is very notable. You should note as well, of course, that right now this is not the most advanced that's on the market, because that's the Blackwell series that's selling in the US. We're ramping up into Rubin architecture, so you're still a couple of iterations behind. But what we understand is that the Trump team is now looking at allowing Nvidia to be able to export the H200 to mainland China, which would be a huge departure from its earlier stance, because it came in, of course, looking at limiting further Nvidia's ability to restrict China's access to this type of chip. And it would also, of course, be a major concession to Beijing, given you're going to have quite a lot of blowback, or you can anticipate that blowback from the hawks that are within the Trump administration.
Which makes you think, how big of a win would this be for Nvidia? Because even when you talk about the H20 chips, Beijing didn't necessarily want to buy them.
Yeah, exactly. And I think this is sort of, I think personally also one of the big questions out of this. China's, and this is the argument that Jensen Huang has made multiple times, is that the more that you restrict China's access to chips, the more you drive that push for self-reliancy. And even as the curbs on H20 have been lifted, China still doesn't want them, and they're pushing for those internal competitors to scale up capacity. So yes, it is that big question. But the argument that Jensen Huang continues to make is that if you go in with a more advanced version, you can still get some market share, but right now they're locked out completely, and it's putting them at a disadvantage. So, I mean, the market reaction, we saw at least some like this for Nvidia, because we saw that intraday move around 2% higher. But we should emphasize as well, according to the sources that we're speaking with, this is a Bloomberg scoop, but no decision has been made here. Entirely possible that this idea just remains an internal debate, essentially, and never actually progresses to export licenses.
Belle, out of China this week, we also have big earnings to come. Talk to us about what you're watching.
Yeah, well, there's two main ones that we're going to be watching for. So there's Alibaba and also Meituan, and both of these companies have been locked in a very intense price competition we've seen with JD.com as well, but over food delivery and also quick commerce. And so we already had the JD numbers out, and they showed us the bearing that sort of competition and intense rivalry is having on the business. We're going to maybe see a similar kind of situation with both Alibaba and JD and Meituan rather this week, with some profit erosion. What else could weigh on both of these companies' numbers is just the amount of capital that they're investing into AI, their AI initiatives. Alibaba, for instance, has already pledged $50 billion. They say they want to go beyond that. Meituan numbers as well, those are due on Friday, and we could actually be looking at the first quarterly loss in more than 3 years for the business.
And Annabelle, before we let you go, you actually spoke to Foxconn Chairman Yang Liu. What did he tell you?
Yeah, that's right. So we had an interview with the Foxconn chairman, that's Hon Hai, of course, also known as, but on Friday, this was at their Hon Hai Tech Day, where there was a really big announcement that was made for the company, essentially a new agreement. They're going to be scaling up their cooperation with OpenAI. These companies are already very intimately involved in Project Stargate in the US, because Foxconn is the biggest supplier of AI servers to Oracle, and OpenAI and SoftBank are working on this infrastructure project. But wanted to get more details on why they're now going to be working directly together, and also the scale and the potential of what this could mean. But I asked him in terms of maybe not financials, because he wouldn't comment on that, but what about compute power?
A gigawatt per week will be the goal.
Okay, 1 gigawatt per week.
That will be Sam's goal.
Okay.
But we can start with 1 gigawatt per month.
So you think you can add 1 gigawatt per month next year?
Starting the second half of the year.
Second half of the year, so you think you can add 6 gigawatts next year?
I'm not sure. It really depends on our study and our new way of doing things. It takes time. But
Okay.
eventually we're going to get there.
Let's talk about then this opportunity in the US, because as you said, part of this is about Make in America. It's
Yes.
very ambitious. What's the capex that you need to also dedicate to the States?
The capex wise is in maybe 1 to 5 billion to start with, to build the factories, to build R&D centers, but to build the working capital required to build a data center. That's totally different. That requires huge amount of money.
Yeah.
And with that, we are going to work with SoftBank.
What are the biggest challenges with scaling up in the US?
Shortage of labor. As I mentioned to you, it's not the labor cost, it's a shortage of labor. Yes.
How do you get around that? What are the conversations like, and what are the biggest shortfalls that you see?
Yeah, we have to work closely with schools and the government, which we were very familiar with when we build factories all over the world. We had to work with local agencies or local government to get their people ready for the kind of job that we require.
Foxconn Chairman Yang Liu speaking with Bloomberg's Annabelle Drewler. You can get more about the global AI race in this week's episode of Bloomberg Tech Asia. We'll be diving into the circular deals fueling the trillion-dollar boom and what it means for the biggest players in the region. Tune in on Friday at 8:30 a.m. in Hong Kong, 7:30 p.m. on Thursday in New York.
And stay tuned for another big interview coming up on Bloomberg TV. We'll be speaking to Lenovo CFO about their latest earnings results. That's coming up on The China Show. We have more ahead on the Asia trade. This is Bloomberg. Tensions between Japan and China are escalating sharply over Taiwan. Tokyo has rejected Beijing's claims that its position has shifted even as China threatens resolute self-defense against Japan in a formal letter to the UN. Let's bring in our China correspondent, Min Lo. Min, Prime Minister Sanae Takaichi and Premier Li Qiang, they were in South Africa for G20. Were they engaged? To what extent were they able to talk?
Well, Takaichi was pretty much keeping her distance away from Premier Li. We knew ahead of the meeting that Premier Li, that China was not planning to speak or to organize a meeting between Li Qiang and Takaichi. And ahead of that as well, China had cancelled this trilateral meeting between the culture ministers of Japan, South Korea, and China that was slated to take place this week. And Takaichi was asked about, whether she had any chance to speak with China. She said there was no chance to do so, but she's not closing the door to dialogue. And in fact, Japan is still calling for dialogue and also dismissing China's claims that Japan is changing its position on Taiwan, calling it completely baseless. And this comes after China had submitted a letter to the UN in order to rally support for its position, saying that it's vowing to take resolute self-defense if Japan dares to intervene militarily. So tensions are escalating, and in the meantime, the Chinese embassy in Japan also wrote a text on X saying that China has the authority to defend itself without needing UN approval by citing this enemy status clause. But Japan saying that that clause is essentially obsolete by this point.
And Japan not backing down. The defense minister just visiting a military base close to Taiwan. What do we know?
Yes, Japan's defense minister is making his first visit to Yonaguni, which is an island just 100 kilometers to the east of Taiwan, a very strategic location. And he's saying that Japan will plan to deploy some missiles from that island. And we all know about Okinawa. That's the larger island further to the east that hosts a U.S. military base. And recently, a U.S. training has also deployed some of the supplies from Okinawa to Yonaguni. Yamaguni. And of course, this is something that would potentially provoke China to perhaps also respond with its own military drills to the region. Now, Japan's defense minister said that this is something that would preemptively deter any military conflict in the region, dismissing any claims that it would destabilize peace in the region, but it's part of Japan's military buildup along the southern island chain.
Bloomberg China correspondent Bin Bin Lo there. Let's actually discuss the diplomatic spat ongoing between Japan and China with Sheila Smith. She's Senior Fellow for Asia-Pacific Studies at the Council on Foreign Relations. Sheila, really good to have you with us. So we are seeing both sides coming out with very hardline policies. What is Prime Minister Takaichi's strategy here, given that she's not backing down?
No, and I think it's great to be with you as always. Takaichi made her remarks in the Japanese Diet in response to the questioning by an opposition party member. So the statement that she made was perhaps more clear about whether or not a Taiwan scenario would worry Japan or would lead for Japan to think about its own military acting at that point in time. But the policy is not new. It was interpreted and has become law in Japan's security legislation since 2015. But she is not in a position at home. She's in a minority government. Her party has had 2 setbacks electorally, but she is not in a position, I think, to compromise here. She basically stated Japanese policy, and now the Chinese are taking step-by steps to escalate. The Chinese government has asked for a retraction, but the chief cabinet secretary very quickly said that there is no reason to retract anything. To be clear here, I think it's really important that Japan, she did not say that Japan would use force against China. What she said was, independently, what she said was, if there's a scenario in which China uses force against Taiwan, then Japan would have to think about the consequences for Japan's defenses. And I think that's important to remember. She didn't say that Japan would militarily intervene in a Taiwan contingency, but she did say a Chinese use of force would cause Japan to consider its defense needs, right? So I don't know. I mean, I think the escalatory path is interesting to see. It's mostly economic at the moment, but the statement at the UN, for example, and Wang Yi's comments, I think, are suggesting that China may want to put even more pressure in even exercise, right?
Do you think such a diplomatic spat with China will actually help Takaichi's government? As you said, they're in the minority. They're not that strong, but you can see the opinion polls, Yomiuri poll just today being released. Takaichi cabinet approval rating 72%, Mainichi poll 65%. It always happens when you have a diplomatic spat, external issues, that you actually get a boost domestically. Given that Takaichi comes from a conservative side, can this help?
Well, it obviously is helping. And here's the thing to be that I think is important. Her approval rating when she became prime minister was very high. By some accounts, it was in the 80 percentile. Yomiuri had it just slightly lower than 80. Whether this spat was going to help or hinder her approval was not really clear to me anyway. But what you had was spot polling earlier in the week, earlier in the conflict, to basically say, did she do the right thing? Did she say the right thing? And 49% of the Japanese people said yes, which is very unusual given, as you may know, the Japanese hesitancy about use of force and making comments about the use of force. What these recent polls, and I'm glad you noted the Yomiuri poll in particular, what they reveal is actually she's getting a rebound of a positive rebound from the way she's handling this. So I think what this indicates is the Japanese public is not taking the Chinese response well. The economic sanctions have been on tourism to Japan. Well, a lot of Japanese think there's too many Chinese coming to Japan. The seafood products, I think there's been a sense that that's just been resolved and now there's a setback. So I think public opinion is a little bit on her side. That doesn't mean it's going to stay on her side. So the escalatory dynamics are important. Yeah.
Just wondering as well, do you think that all this is helping to boost maybe not just Takaichi, but also Japan's profile on the world stage and how they are engaging with other world leaders. I mean, you recall what we saw between her and Meloni as well.
Yes. So I don't really, that's a really great question. I'm not sure I know the answer, but I think she has captured the spotlight, Takaichi herself. She's had a really good meeting with the ASEAN leaders at the APEC summit, where she did meet President Xi. The Trump meeting, when President Trump went to Tokyo, went really well. And now at the G20, she seems to be holding her own. I think for Japan, they see themselves as the country who wants to defend the existing rules-based order. Their diplomacy is very focused on multilateralism, and they see China as challenging the current rules-based order. I think there will be support for her in some quarters, or for Japan writ large, but I'm not sure it's going to be uniformly across the globe that everybody will take Japan's side and not China's. But I think that both China and Japan are playing on the global stage now to demonstrate that their positions are the right positions, and this will unfold, I think. I'm not sure how, but I think once we get close to either the threat of the use of force or a much more of ships go into the East China Sea, if you start to get that kind of dynamic to the tensions, then I think people will get worried, will get seriously worried.
As you say, now the tensions are mostly economic, and I guess at this stage it's also worth taking stock in how Japan, under Takaichi's leadership, has been engaging with the U.S. on economic and tariff policy. What do you think is the key thing that's going to shape their relations going forward?
Well, I think, clearly the tariff deal was negotiated by her predecessor, Prime Minister Ishiba, but the gentleman who negotiated it is now in the cabinet. So there's continuity on the Takaichi position on the U.S. And the idea and the visit of Trump to Tokyo produced several documents, cooperation on rare earth and critical mineral supply chains, on scientific innovation, next generation technology. So you see that the relationship is focused on these economic dimensions, but shifting it over a little bit to economic security kinds of priorities. I think she's going to be very consistent. The U.S.-Japan alliance is very, very important to Japan. And I think during the Trump visit, you also saw the two of them on the U.S. aircraft carrier that's home ported in Yokosuka. So we're going to see more of this kind of idea that the U.S.-Japan alliance will be stronger than ever under Takaichi.
Sheila, always great to get your analysis. Thank you so much for your time and insights. Sheila Smith is Senior Fellow for Asia-Pacific Studies at the Council on Foreign Relations. Catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo, and subscribers can watch live on the terminal using the TV Go function. This is Bloomberg.
South Korean stocks are on track to post their strongest gains in a quarter century. The Kospi is up over 60% this year, becoming the world's best performing major benchmark thanks to the AI boom. But questions are mounting over whether this rally can last. Asia stocks reporter Yu-Kyung Lee joins us with more on this. And Yu-Kyung, of course, President Lee started his presidency talking about Kospi 5,000 as a goal, and we're very close to it now.
Yeah, we were only about 20% away before the Friday's 4% drop in the Kospi. But let's bring back the time a little bit to April when the then presidential candidate Lee Jae-myung announced his goal of Kospi 5,000 at the time when Kospi was trading at just about less than 2,500. And when the candidate Lee announced that plan, few people, I think, really took that goal really seriously. A lot of people I asked said they took that Kospi 5,000 goal as a symbolic, and to them it was an expression of a commitment to lift the Korean stock market, not really a literal goal. But when I spoke to a lawmaker from the parliament of the Kospi 5,000 task force, he said even the lawmakers in that task force were really surprised. They were taken by surprise by how fast Kospi was rising. rising. Since 2000, Kospi has nobody has ever seen Kospi rising more than 60% like this year. So people are thinking this once unthinkable goal of Kospi 5,000 more likely.
Yu Kyung, to your point, the Kospi has come really fast, 60% rally this year. But what are the potential stumbling blocks or headaches for it?
Yeah, even though the Kospi 5,000 goal has become more thinkable, I think now the question comes down to whether it has a staying power, whether the rally has a staying power. For one, it's really rare for Kospi to stage 2 years straight of rally of this extent. And secondly, there is also a question about whether this global AI boom will continue. South Korea has been the AI poster child in Asia, and it's been one of the biggest beneficiaries of the global AI narrative. A lot of the investor has been chasing the AI beneficiaries located in South Korea's stock market. So unless the AI boom continues, it's really difficult for the Kospi to continue to rise at this pace. And another headache is the rising leverage and margin trading. Retail investors locally has been starting to chase the rally, some of them driven by FOMO this November after ignoring the rally for much of the year, and they are coming with great amount of margin trading, which is standing at a record high and has been renewing the record level almost every day. So those has been the headaches for the Kospi's rally.
I suppose those levels of leverage are also a headache for the BOK as we await its decision this week. Yu Kyung, thanks so much. Our Asia Stocks reporter Yu Kyung Lee. And as she was just highlighting, certainly it is stocks in a good mood today, not just from the Nvidia headlines about how US officials might be mulling a plan that could allow them to sell to China, but also what we've gotten from the Fed speak. John Williams, often seen as a proxy for Jay Powell, seems to be voicing support for a December rate cut. Kospi futures moving on up. We are also expecting continued gains. Take a look at how those Nikkei futures are faring. Japan, of course, is shut for a long weekend. Markets open next in Seoul. We'll track the open. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens. Couple of things we're watching in the session. Japan is shut today, but of course we do have Kospi futures pointing to that bit of upside after Wall Street bounced back thanks to the Fed speak. John Williams, often seen as a proxy of sorts for Jay Powell, seems to be opening the door once again to a Fed rate cut come December. And this is despite the data that are showing us pretty mixed things. But the UMich consumer sentiment did raise some eyebrows about how dire things are looking. Now, aside from that, the other key thing to watch would be the tech play, following on from reports that US officials might be considering a plan that could allow Nvidia to sell to China its advanced H200 AI chips. For the moment, though, we are seeing the Kospi looking a little tepid. We are on watch, of course, for whether those tailwinds materialize, especially for the likes of SK Hynix and Samsung Electronics as Nvidia suppliers. Now, keep in mind, we have been seeing that continued weakness in the Korean won, partially to do with those concerns about the lack of the investments from Korea going into the US. That stock market outflow has also kept pressure on the local currency. We We have the numbers now in the early goings, and it is a rebound of about 1.7% we're seeing on the benchmark as well as on the Kosdaq, looking like it's in the green. Japan, as I said, is shut today, but we, of course, are watching the yen. Following on from Finance Chief Katayama's comments, she made the most direct comments so far, remarks about how intervention could make sense. But if you look at the moves in the Japanese currency, the gains following on from her comments didn't last very long. So it tells you the extent in which traders might be believing Japanese financial authorities, in which they have the wherewithal to pull the trigger when it comes to actual intervention. Take a quick look at where U.S. markets are faring as well. Following on from that bounce last Friday, I talked you through some of the drivers, but keep in mind as we watch the bond futures that are trading, the expectation is that they stay pretty range bound after really impressive gains so far this year. Of course, all this given the Fed uncertainty. Let's bring in Junpei Liu, co-founder and lead portfolio manager of 10Cap, for an analysis on the market direction. Junpei, always good to see you. I've talked through some of the drivers. What's top of mind for you, and what is your expectation of how the Fed is likely to shape trading, not just into the end of the year, but perhaps the first quarter of 2026?
Well, absolutely. Look, thank you so much for having me. Our view of the market driver is very simple. It's a fundamental of the economy, and then where the Fed directionally, where the Fed is going. The fundamental of the economic activity is actually been pretty good. Yes, consumer confidence was a little bit soft, but still it looks pretty good. And directionally, Fed is still going to cut many times over the next 12 months. Now, our view is that December there will be a cut. Market got a little bit nervous just the last couple of weeks. But our view, regardless of the cut, it is still going to be many to come in the next 6 months or so. So our view of the market is pretty positive, particularly post this pullback in some of the I guess the highest growth names, and then it really lays a good groundwork into a rally into the year end. Remember, equity market historically it meant to pull back 5% every 12 months, and 10% every 18 months, and a bigger pullback every 3 years, but on average over 7 years it doubles. So we are experiencing a normal volatility, and it lays pretty good the foundation for the equity to be rally from here.
To your point about this perhaps having been a relatively healthy correction, does that same logic apply to cyclicals though? Because if we are looking at the Fed trajectory, they might not be cutting as much. What does that mean for that segment of the market that I know you are pretty constructive on?
Sure. I do think the cyclicals, we're still pretty constructive. I think cyclicals, certain parts of us certainly looks a bit weaker. Overall economy still looks pretty strong if you look at the jobs market and the others. So, in our view that this, this part of market remains to be interesting, and then to perhaps to pick the, pick some of the turnaround stories from, and some of them post a pullback, the valuation looks incredibly attractive. So the underlying economic health still remains very strong.
What about the AI play? Where do we go from here on this? We've come through this bout of valuation concerns, Nvidia beat, but that hasn't really helped the market. Is it more going to be about headlines driving the markets, given how we're seeing H200s? Maybe Nvidia gets to sell this to China.
I think that's a really good point. Market certainly has become very sensitive to a lot of headlines to do with Nvidia, its result, and then that hence to lead the direction of the Nasdaq. Our view is that the recent sell-off and volatility is somewhat linked to other volatile assets or highly leveraged assets such as Bitcoin, and then since they leverage, and then that has a spillover effect into some of those more volatile and expensive companies, and that's why when the sell-off took place, it happened in that space. Our view is that AI remains to be a key thematic. However, some space of AI has attracted a lot of funding from the hyperscalers and others, and these areas perhaps are harder to see the returns. But just in terms of the user case and others, we are certainly seeing broadening out of the usage of the AI tools, and we are very excited about that. I'm sure at Bloomberg there's lots of AI tools already being adopted. Even at 10cap we use at least 3 different language models. So it's a very exciting time ahead.
What does this all mean for market leadership? This has been a year where it's Japan, Taiwan, South Korea. Is that the same expectation you're carrying through into 2026? What are the potential rotations to other markets that look attractive?
Yeah, sure. Look, I remain to think that the tech will come back especially with the pullback. So perhaps the early part of next year we will see the leadership to move back into the US because we're heading towards midterm. We're expecting the news flow to be positive, and we are still have a lot of deregulation to come through in the financial sector there in the US. So we do think the US market will continue its leadership, and then if we look at across the rest of the Asia, we think the China has really quite aggressively. We do think some areas have become a little bit more stretched, but we remain to be very comfortable across some of its consumer exposures and SMEs. Housing remain to be very, very difficult. I think Japan market. I can hear you very well.
Sorry, continue what you were just saying, Junpei. Did you say that Japan looks attractive to you? So Japan market, look, I think Japan market still looks good. As long as they stay on the path to provide liquidity to the market. I think tightening of the liquidity isn't going to be a great thing. So that's they should still be well bid. I wonder as well, could you weigh in on how to generate alpha in such an environment, and also keeping in mind how you've long been an advocate for active investing, and I know you're pushing through this ETF that's set to launch?
Yeah, absolutely. This market, market volatility really creates a lot of opportunity for active investors, particularly like ourselves. We have tools of being able to short and long at the same time. So that gives us, perfect tool to be able to take advantage of the volatility and to jump into companies that's being oversold. At the same time, hedge the risk with our shorting capability. In fact, today is the launch of our ETF TCAP. We're very excited about it because it's the first time that investors can have access to the 150/50 long-short Australian equities active ETF, it's really democratizing the way the investor can invest. So we're very excited about that.
Junpei, can you talk to us about the currency risk? So, as we watch the Kospi rebound this Monday morning, we've been seeing, though, some of the market outflows that have put pressure on some of the market leaders stock-wise. Do you see that as a risk going into the first quarter of next year?
Possibly, but I think my view is that I do think the overall economic activity is pretty sound to be able to support a lot of those economy, and our currency isn't a immediate issue for me. I think the key worry is that, of course, the US dollar, if they suddenly strengthen significantly, then it creates a lot of problem for a lot of those Asian countries. But my view is that, look, with the amount of rate cuts that's coming through, despite the US economy is actually doing okay, I think the US dollar probably is capped to where it is.
When we look at the bursts of volatility and how you see it as an entry point, are there particular sectors, aside from the AI play, that you're assessing as looking the most attractive?
Yeah, look, I think for me, with the amount of rate cut that is coming through there in the US, your cyclical sector remains to be the top pick because these are the companies' earnings will be benefiting from the rate cuts. If you look at what's being severely impacted in terms of share price across different sector, the home builder, for example, has been impacted significantly, and many of them are trading at all-time lows. So looking at the rate cut, you're looking at the beneficiary. So cyclicals will be the sector that will has the most earning upside, and then it's the tech leaders, the growth leaders, if you like, not necessarily just AI, but the growth leaders, because some of them has really been sold off as the investors deliver their portfolio into the year end. So these are the names that really are worth picking up on, because ultimately the portfolio requires growth over a long period of time, and these growth leaders will future-proof the portfolio.
To your point about cyclicals, how are you assessing commodities, miners as well? Because we are seeing this increased need for consolidation as these industries get reshaped. We're hearing from BHP, for example, and how that takeover attempt, quite quickly fizzled out reportedly. So what is your sense of what the most potential is when it comes to miners, for example?
I think you're making a really good point. So just in the particular with this BHP, it certainly seems that the company won't give up. And even though it's fizzled out, the deal itself, but it wouldn't preclude them from doing it again. Or from bidding other companies. One of the biggest challenge with mining businesses is that they've never been good in keeping the cash when they're generating, when things are good. And they tend to go and bid for companies at the top of the market. So we are now seeing a lot of M&As taking place. Clearly, the commodity prices have been supportive, has been good for them. So that is the big risk. So usually it does mark the top of the commodity market. And we do hope them to be sensible and pay back a lot of those, the free cash flow generated from the current high commodity prices.
Junpei, really good to get your insights on the markets on what I'm sure is a very exciting day for you in the launch of the ETF. Junpei Liu is co-founder and lead portfolio manager at TenCap. More ahead on the Asia trade, this is Bloomberg. We're watching FX moves as we unpack the Fed speak, including from John Williams, and how the dollar has been remaining pretty flat in the past couple of sessions. Of course, we are on intervention watch when it comes to the yen. Japan stock markets are on a holiday, but it's really interesting how, despite these comments from Japan's finance chief, markets don't really seem to be buying that they will have the stomach to pull the trigger. You are seeing it also looking pretty flat among the other pairs. Our Bloomberg chief FX and rates correspondent Ruth Carson joins us now. So, Ruth, there is a sell Japan trade that's intact. I mean, we can count the costs of what we've been seeing in stocks. But when it comes to the yen, why is it that investors just don't buy that the Japanese financial authorities will have the stomach to pull the trigger?
Absolutely. And if we look at the sell Japan trade as a whole, the yen is definitely at the forefront here. If I was Japan and Japanese authorities, I would certainly be worried. There are a lot of factors fueling this sell yen trade. There is certainly the expectation that fiscal spending is very much a priority. The package that we saw that was revealed on Friday was large. And for the bond investors out there, the macro investors, this isn't great news. This isn't great for yields. And to be honest, while growth typically is good for currencies, the Bank of Japan is seen as being behind the curve when it comes to tackling inflation and interest rate rises. As a result, the yen is definitely under pressure. We've seen it pull back a little from the 160 mark. That was very much the red zone, as people say. But look, is it completely out of the dark? Absolutely not. Investors are still looking to strike.
What about for JGBs? Because belly of the curve, investors are looking there as well. What are you seeing in terms of, the potential selling opportunities?
Absolutely. And this is a fascinating story to unpack as well. We all know that ultra-long bonds have been under pressure. US, gilts, Australia, and definitely heavily in Japan. But interestingly with JGBs, we know that Japan is looking to alleviate some of the pressure in the long end by selling and shifting more of the issuance to the front end of the curve. As a result, we're seeing traders definitely looking for opportunities to short the so-called belly, and that's 5 to 10 years part of the curve. Now, remember, Goldman came out in September warning that Japan was particularly vulnerable here on the 5-year part of the curve, and we have seen that in the price action. Previously, in the last couple of months, pressure has been nothing compared to the 30-year, the 40-year, the 20-year even, and now we're seeing more yield rises in that part of the curve. Watch the space.
We talked earlier about yen intervention. What about when it comes to the Indian rupee, which also plumbed those record lows, and also the similar idea that we're not going to see authorities step in?
Absolutely. And a lot of this is to do with investor sentiment. We know that India, out of all the Asian countries out there, actually has had more tariffs compared to the likes of its peers. And investor sentiment is, as a result, dented, definitely, on the rupee. Now, remember that intervention, any form of intervention, costs a lot of money. And for the RBI, the question is, do you keep spending heavily? Or do you try and, keep some powder in check, dry ammunition to tackle the rupee if and when needed? Right now, the line in the sand for a lot of people is around the 90 mark. Just when will we hit it is the question that's sort of rippling across trading desks.
Ruth, always get to get your insights on all this. Ruth Carson, our Bloomberg Chief FX and Rates correspondent. Now shifting gears and looking at commodities as well, because there's been a bit of M&A news this weekend and all through this morning as well, with Anglo American set to reject BHP's latest takeover proposal. Both counters looking quite flat on BHP. Rio Tinto is looking a bit more positive. Of course, you also have in the background some of that appetite for stocks in general in Australia coming back. Let's get more on the latest back and forth between BHP and Anglo American with Bloomberg Metals and mining reporter Paul-Alain Hunt. So, Paul, we've been talking through why it makes sense for BHP to move to take over or attempt to do so for Anglo. But remind us again why this move transpired, and are we going to see more of this to come, or are we end of story here when it comes to this potential takeover?
I mean, it's incredible. Just a year or so ago, we were talking about BHP making its first attempt to take over Anglo. And then on Sunday, just yesterday, less than 24 hours ago, we broke that they'd returned for another crack. And almost as soon as we announced that, we've managed to break more news that BHP has been rebuffed and will step away from Anglo once again. At the heart of it lies copper, the key energy metal for the transition. It's all about electrification, the rise of data centres, the need to decarbonise. And BHP sees demand for this red metal soaring 70% by 2050. So it's one of BHP's biggest growth commodities. If it has a pillar of growth, it is in copper and another one in potash. So just to remind, last year it made a $49 billion bet bid on Anglo. That was rebuffed. There were a lot of issues to do with that approach. And then this week we've announced that they came back and made another one. And it comes as Anglo American forms a new combined company with Teck Resources. Of course, that deal goes to shareholders in about 3 weeks' time. It was a lot of analysts are saying this was a last-ditch attempt, that it was a last roll of the dice for BHP to grab these massive assets, these massive copper mines of Anglo Americans and really boost its own portfolio. BHP has a massive portfolio itself in copper. However, a lot of its mines in Chile are starting to decline in terms of ore grade.
So what are the options for BHP then? I mean, are there any if it doesn't go through with continuing to try and take Anglo and its assets?
We can be really speculative and say, you know, perhaps once Anglo American and Teck combine and create a new company, Anglo Teck, that perhaps BHP takes another crack then. We don't know. But the universe of big copper stocks is actually quite small, and they're all trading quite high. They're valued stocks. So BHP is really in a bit of between a rock and a hard place to try and find other takeover targets. It does have its own growth portfolio, organic growth portfolio, some might call it. However, a lot of that is in greenfield projects, so new mines, and those mines can take years, if not decades, to develop. It's got one in the US called Resolution, and it's got a project called Vicuna up in the mountains of Argentina, but that's, you know, a long way off producing copper. So right now we're waiting to see what this actually means for BHP.
I guess to your point about all this is crunching the numbers and the math for BHP, right? And one of the criticisms a year ago was how complex perhaps the structure or the deal, you know, was at the time. Has there been some of that mitigated this time around? Because that could inform what we can see by a possible approach down the line.
Absolutely. Look, Anglo, when BHP made its first attempt at Anglo, Anglo decided, look, we understand that our shareholders want to see more value. So they divested a whole heap of non-core assets. One of them is De Beers, the giant famous diamond arm of Anglo American, and that's underway at the moment. It got rid of its nickel assets to MMG. It has made some, and of course it's getting rid of its Australian coal portfolio. All of this has not been easy. However, shareholders have rewarded Anglo management by sending the share price higher. So that's become a challenge for BHP. Any bid that it would make would have to be a significant premium.
Paul, really good to get your context on what's been a big story in terms of potential M&As. Bloomberg Metals and Mining reporter Paul-Alain in Melbourne. We have more ahead on the Asia trade. This is Bloomberg. Now, we've just been talking you through BHP and its attempt to approach Anglo American as an Australian headquartered firm. Another possible deal that we're watching is that between Macquarie Asset Management offering to buy Qube Holdings, and this is an Australian logistics and shipping containers company. The deal could be valued at $7.5 billion, and we are seeing that market reaction for the stock of Qube that is jumping at one point as much as 19-20%. We'll continue tracking some of these market moves. We'll have more ahead on the Asia trade. This is Bloomberg.
It is probably the most productive day we have had on this issue. Maybe in the entirety of our engagement, but certainly in a very long time. But work remains, and because this continues to be a working process, you know, I don't want to declare victory or finality.
Work in progress. The U.S. Secretary of State Marco Rubio speaking there about this potential deal or peace agreement between Ukraine and Russia brokered by the Americans. For more, let's bring in Leslie Shedd, Atlantic Council's Eurasia Center non-resident fellow and founder of national security communications firm Rising Communications. She was previously a senior advisor to members of the U.S. Congress, U.S. senatorial and presidential candidates. Leslie, always good to see you. First off, talk to us about your sense of the key power players in this deal? Because it does look like J.D. Vance did play a very strong part in this. How might this inform the shape, the contours of this 28-point peace plan?
I think that multiple members of the Trump administration have participated in this. I also think it's important to keep in mind that while it might feel like this is something that came out of, negotiations over the last couple of weeks, the president and his team have been meeting with the Russians, they have been meeting with Europeans, they have been meeting with Ukrainians. So they have been doing this for months and months and months. What this document is a result of all of those meetings, and it has been because of meetings that have happened, again, with Secretary Rubio, absolutely with Witkoff, certainly. Dan Driscoll appears to have been a part of it. So I think that you are seeing a lot of key figures in Trump's cabinet that are national security experts all meeting together to try to figure out how to find peace.
Do you think there is agreement among U.S. officials at this stage in terms of what peace should look like between what Vance has in mind and what Marco Rubio has in mind?
I think that the most important thing is everybody agrees that they want peace. Every single person in the Trump administration absolutely wants to find a peace deal. They all understand that that is going to have to include some type of concessions. What do those concessions look like? I'm certain that each one of them bring different thoughts and opinions to the table, but at the end of the day, whatever a final deal looks like, which hopefully we will get to one, it is going to include a lot of their thoughts, the President of the United States thoughts, as well as input from our European allies and from Ukraine.
What should the final plan look like in your mind? And does this require Ukraine to perhaps make some concessions when it comes to land?
So I think most importantly, what President Trump wants, what everybody wants, is not just a peace deal here, but a lasting peace. And the only way to ensure that is if there are security guarantees backed up by both the United States and Europe and enforcement mechanisms for those security agreements. The Budapest Agreement didn't work because all it was reassurances. It was never any type of guarantee. So in 2014, when Russia came and invaded Crimea, President Obama didn't want to help Ukraine. He didn't have to help Ukraine. So I think those are key. I would also take this a step further and say it is really, really the best thing to do here would be for the president to submit these security agreements as a treaty to the United States Senate and have them ratify it, or at the very least have Congress codify it. This is important for two reasons. Number one, it will ensure that these security agreements will be enforced no matter who is in office, who sits in the White House over the next 10 years. And number two, it sends a very powerful and important message to Putin and to our allies all over the world that the United States stands firmly in support of this, Republicans and Democrats, executive branch and legislative branch.
Leslie, you were alluding to some of this earlier, though. In terms of the European officials gathering, they might be scrambling now to come up with a counter proposal. But given how they seem to have been locked out of what's been agreed between the U.S. and the Russians, or discussed at least, to what extent can this be lasting?
So I don't think it's fair to say that. Again, when you're talking about negotiations of this size and this magnitude, it's not something that's come together over the last 2 days or 2 weeks. This has been because of input from European Union leaders, from Ukraine, from Russia, from all different parties. The president and his team have been taking these meetings for months and months and months. So I do think that Europeans are absolutely sitting down. Ukrainians are doing the same thing in Geneva right now. There's reporting out that says Ukraine has proposed some changes to this plan. President Trump is a deal maker. He's a master deal maker. He understands that we've got to have something, put pen to paper, get something in writing so that we can sit down and hash out what is and is not acceptable.
What do you think the Europeans should be including in a counter proposal then?
That'll be up to the Europeans. Like I said, to me, the most important part is making sure that these security agreements are in place and that they have a very strong enforcement mechanism. We've got to make sure that is what is going to deter Putin from trying to do this again. I would say, too, and going back to one of your earlier questions, I know there's a lot of frustration about the idea that Ukraine is going to have to concede land. I don't like that. I don't think anybody that supports Ukraine likes that. I don't think it's fair. That being said, President Trump believes, and I agree with him, that because President Biden refused to get the weapons into Ukraine when they needed them at the beginning of the war, when they had the ability to fully repel these Russian troops, because he did not do that, it allowed Russian troops to entrench themselves, and it has created this stalemate. And as much as I don't want to see a single inch of Ukrainian land given to Russia in order to get to a peace plan so that we can stop the slaughter that is happening, the only way to do that is going to be through a negotiated settlement.
Leslie, can you talk to us about why we've been seeing, to your point about this in the background having come after perhaps weeks of negotiations that is involving all the parties, why the timing and the manner in which this potential peace plan is being announced? What do you think is going on in the background here?
So one thing for timing that's important to keep in mind is that winter is coming. Winter is here in Ukraine, and it is going to be a very cold, very hard winter for the people of Ukraine as Putin continues to target their energy infrastructure. I think the president knows this in the back of his mind, understands that there is a real risk here to, a humanitarian crisis in Ukraine over heat, and trying to make sure that we can bring this to an end as quickly as possible. So I am certain that that is absolutely in the back of his mind. I know there's been a lot of attention paid to this deadline, right, that the president has set. But again, President Trump is a master deal maker. He knows when you're in negotiations, you got to set deadlines with people. Otherwise, they'll just drag their feet forever. He's already come out and said very clearly that this is kind of his introductory plan. There's flexibility. Secretary Rubio has said the same thing, too. So I think that the timing and the pressure right now is to try to make sure these negotiations are continuing to move forward. I think he felt that they stalled out, especially after the big success of the Alaska summit, and he wants to try to get this rolling again.
Leslie, I wonder also if you could shed some light on how the American public might be viewing all this. We've just come through early November elections where a key issue, of course, is domestically. What we're seeing in the cost of living, the Democrats, there was a clean sweep pretty much. How does the domestic backdrop perhaps play into what we're seeing on the global stage in this really high stakes confrontation between Ukraine and Russia?
So poll after poll has showed that Americans will continue to support Ukraine. Even a majority of Republicans continue to support Ukraine. So I don't think that this is any kind of a negative thing against the president. I think overall Americans are war weary. I think that they want to find an end to this. I don't think many of them very much like Russia, and certainly don't want anything that appears as though Russia is a victor. But we've all seen the images and the videos of, dead Ukrainians, children being targeted, women being targeted. We've got to figure out a way that we can end this war and save lives.
Among the confrontations, I think slight concern as well is whether the Trump administration is taking a more aggressive posture in the Caribbean. It's not just about brokering these peace deals between Ukraine and Russia or even in the Middle East. What is your assessment of what we should be paying attention to in terms of the Trump administration's position there?
So first, I think in general, the president is working to reestablish America as a global dominant force, right? We are making America strong again. And I will tell you that when America is strong and America is involved, it makes a stronger and safer world as a whole. So that is great. The things that are happening in the Caribbean with regards to Venezuela, it's important to know that every president since Maduro has taken power, Republican and Democrat alike, have all said that Maduro's regime poses a threat to the United States of America and that he is an illegitimate leader. President Trump's just the first one to finally do something about that. So I think that what you're seeing is he is taking these active stances, these active actions in order to protect Americans. Something like 100,000 Americans every year are killed by illegal drug overdoses. And if we had a terrorist that came into the U.S. and blew up 100,000 Americans, you better bet that the president of the United States would be targeting any boats that any more terrorists might be trying to take to come into the United States. The same thing is happening with drugs. The president is trying to forcefully stop these illegal drugs from getting into the U.S. and just decimating our communities.
Leslie, we'll leave it there for today, but it's been good speaking to you and getting your insights into the thinking of the Trump administration. Amid all this, Leslie Shedd is Atlantic Council's Eurasia Center non-resident fellow and founder of Rising Communications. Some top global headlines we're following. Several airlines have canceled flights to and from Venezuela after the U.S. issued an advisory urging operators to exercise caution amid an escalating standoff between the two countries. The FAA has also reported rising interference with navigation systems in Venezuelan airspace. Carriers including Avianca, TAP, and LAN Airlines suspended routes on Saturday, while Spain's Iberia will pause flights starting Monday. Israel says it has killed Hezbollah's military chief in a rare airstrike on Beirut as an almost year-old ceasefire deal with the Lebanese government wavers. The IDF says the attack killed Hezbollah's chief of general staff, Abu Ali al-Tabtabai, the militant group's second in command. According to Lebanon's health ministry, the strike left 5 people dead and 28 others injured. Severe flooding across central Vietnam has killed 90 and left 12 others missing. Vietnam's Ministry of Agriculture and Environment says more than 1,100 homes were damaged and at least 80,000 hectares of rice and crops destroyed. Early estimates put the total economic damage at about $340 million. We have more ahead on the Asia trade. This is Bloomberg. Now, as we see risk assets pick up in the Asia Pacific today, what's also worth noting is we, for some moments late last week, actually saw cryptos creeping back up, but we then saw them extending the selling. Bitcoin is still under pressure in this early goings on the Monday morning. Our senior crypto editor, Ryan Weiss, joins us now. So, Ryan, of course, we've been watching crypto as a sort of barometer of the risk appetite in the markets. We've been discussing this last week as well. But now we're seeing this move lower. What is driving this?
Yeah, so it all stems back still to that October wipeout where something like $19 billion in levered bets on Bitcoin and other cryptocurrencies were erased, all of a sudden. I think what's driving it lower now is that confidence levels among crypto traders in general is just very, very low. And you saw that late last week. We were sort of continuing to tick down past $85,000, which was seen as a key support level. And then all of a sudden we fell as low as to within striking distance of $80,000. And a big factor there is that this confidence point I raised, there's something called the Fear and Greed Index in crypto, which is now at its lowest point since 2022. There was a big crypto sell-off in that year. And November is now looking likely to be the worst month for Bitcoin since 2022. So everything's heading in the wrong direction. Another big factor is that individual holders who have a lot of Bitcoin, whales as they're called in crypto parlance, they're starting to get rid of their Bitcoin too. That was part of the big move on Friday.
I was going to ask you, how are investors or traders positioned? Are they just selling what they have? Are they building up more bearish bets on crypto?
More bearish bets, more downside protection. ETF flows suggest they're just, again, not much confidence in the market. We saw, I think, the second highest outflows from the ETFs that invest in Bitcoin in the US late last week. That is sort of another factor in pressure on the price of Bitcoin. I think, one of the key things to understand is that Bitcoin and Bitcoin traders are very used to these kind of up and down cycles. It's happened throughout Bitcoin's 10, 15-year history. What's different this time is that the market is so much more institutionalized, and things like ETF flows can have a massive impact on continuing to pile pressure on the price. There just aren't many catalysts for the price to go in the other direction at the moment. And one other factor I draw attention to is digital asset treasury companies, which were a source of momentum for Bitcoin earlier in the year. They're now starting to become a problem. Michael Saylor's strategies, securities that it's issued to buy Bitcoin are now under pressure. So that's another factor we have to consider.
Ryan, thanks for talking us through these nuances. Senior crypto editor Ryan Weeks. Now, turning our attention to tech, Foxconn aiming to spend an initial $1 to $5 billion growing its U.S. manufacturing footprint. The expansion is aimed at meeting the needs of AI firms such as Nvidia and OpenAI. Chairman Yang Liu laid out the firm's plans with Bloomberg's Annabelle Drawers.
A gigawatt per week will be the goal.
Okay, 1 gigawatt per week.
Per week. That will be Sam's goal. Okay. But we can start with 1 gigawatt per month.
So you think you can add 1 gigawatt per month next year?
Starting the second half of the year.
Second half of the year, so you think you can add 6 gigawatts next year? I'm
not sure. It really depends on our study and our new way of doing things. It takes time, but eventually we're going to get there.
Let's talk about then this opportunity in the US, because as you said, the part of this is about Make in America. It's very ambitious. What's the capex that you need to also dedicate to the States?
The capex-wise, it's in maybe 1 to 5 billion to start with, to build the factories, to build R&D centers, but to build the working capital required to build a data center. That's totally different. That requires huge amount of money.
Yeah.
And with that, we are going to work with SoftBank.
Getting back to that $1 to $5 billion capex in the US, what sort of timeline is that spread over?
We want to happen as soon as possible.
And how are you going to finance that?
Foxconn itself is able to finance that.
What are the biggest challenges with scaling up in the US?
Shortage of labor. As I mentioned to you, it's not the labor cost, it's a shortage of labor.
Yes. How do you get around that? What are the conversations like, and what are the biggest shortfalls that you see?
Yeah, we had to work closely with schools and the government, which we were very familiar with when we build factories all over the world. We had to work with local agencies or local government to get their people ready for the kind of job that we require.
On the AI server production assembly side, because today you made that point that you're at 1,000 units a week. When it
1,000 racks.
1,000 racks, rather. Yeah, you can assemble 1,000 server racks per week right now. Next year, what does that look like in terms of your target?
I would say more than 50% of increase, to up to 1,500 to 2,000 racks.
You think you can double it? That's within sight. Are the data centers ready though? Like is the financing in place?
The power.
Yeah, exactly.
I think the critical thing is the power. Yeah, I think all the data center users, they're all trying to secure power, right? So we found some progress there that for our data center user to secure the power. Because I'm running a data center, the data center users will be the one who can use the data center. So they have more say than us to work with the government for the power, because they're the one can commit, not us. You know what I mean? So they will, I think they have a way to work it out.
They're conversations to have. Okay.
Yes.
If your US factories are going to be highly automated, or they are highly automated, can be, do you see then moving other types of production to the US, consumer electronics and specifically smartphones? Could you shift some production there?
Oh, it's a totally different game. Because as I mentioned, for the servers, their unit cost is so high. The labor cost comparing to it is small percentage, right? But for smartphones, the unit cost, $500-600. So the labor cost, and also the number of units much higher. As I mentioned to you, 1 million phones a day, right? If it's $1 more, that means 1 million gone.
Yeah.
So this is a totally different game. But I think once we have some kind of infrastructure built in the States locally, that infrastructure, the cost of that infrastructure will become a leverage for other products to come.
Foxconn Chairman Yang Liu with Bloomberg's Annabelle Jewelers. And you can get more about the global AI race in this week's episode of Bloomberg Tech Asia. Tune in on Friday at 8:30 a.m. in Hong Kong. And stay tuned for our interview with the Lenovo CFO about their latest earnings results on The China Show. This is Bloomberg. Let's take a look at how Greater China futures have fared or are faring on a couple of tailwinds, including from the Fed speak from John Williams, raising these expectations that we'll see a December rate cut. And then on the other side of things, the AI play, given how U.S. officials have been reportedly looking at how the Nvidia chips can be sold into China. That's boosting the Nvidia suppliers in this part of the world. Overall, looks like a positive day for markets. Our coverage continues. This is Bloomberg.